Welcome back to the channel. Today, we're talking about the latest situation in the United States economy and financial markets, and what is happening right now that everyone needs to pay attention to. The U.S. finance landscape today is full of mixed signals, some positive, some worrying, and in this video, we'll break down exactly what's going on in simple, clear language. First, new data from November shows that private sector employers in the United States unexpectedly cut around 32,000 jobs. Economists had actually expected job gains, so this sudden decline came as a surprise. The most worrying part is that small businesses were responsible for most of the job losses. Companies with fewer than 50 employees shed more than 100,000 jobs, which is a major red flag because small businesses are the backbone of the American economy. Wage growth also slowed slightly, dropping from roughly 4.5% to about 4.4% year over year. When wages slow and job losses rise together, it often means consumer spending could weaken in the coming months. At the same time, inflation remains a challenge for everyday Americans. Annual inflation is still hovering around 3%, with the biggest price pressures coming from housing, energy, transportation, and other basic necessities. Even though inflation is lower than the highs seen in previous years, it is still strong enough to make life expensive for households. Gasoline, fuel oil, electricity, and rent continue to push budgets to the limit for many families, which reduces how much people can spend on other goods and services. This slow pressure adds up over time and affects the overall strength of the economy. Now let's talk about the Federal Reserve, the central bank that controls interest rates in the United States. The Fed recently cut interest rates to around 3.75 to 4% and ended its asset purchase tapering. Many investors expect that the Fed may cut rates again at its upcoming meeting on December 9th and 10th. Some analysts say there is nearly an 85 to 90% chance of another rate cut. However, not everyone inside the Fed agrees. Some officials have warned that inflation is still too sticky and the labor market is weakening, so they want to move slowly and not rush into more cuts. This internal debate between cutting rates to support growth and holding rates to control inflation is shaping the entire financial environment right now. In financial markets, investors are reacting to this uncertainty. Recently, the major U.S. stock indices, including the S&P 500, Dow Jones, and Nasdaq, have moved higher as traders hope for more rate cuts. But at the same time, many are cautious because the economic data looks uneven. Bond yields remain elevated, especially on the 10-year Treasury, which reflects both inflation expectations and uncertainty about the Fed's next moves. If the Fed cuts rates again next week, borrowing costs for households and businesses could drop further, which might boost markets. But if inflation surprises on the upside, the Fed may pause, which could bring volatility. When we look ahead, economists expect U.S. economic growth to remain modest. GDP growth for 2025 is forecast around 1.7%, and growth could slow even further in 2026 to about 1.4%. Some analysts estimate there is roughly a 40% chance of a mild recession in the next 12 months, especially if hiring continues to weaken and consumers cut back on spending. The upcoming Fed decision, along with new inflation and employment data, will be critical. These numbers were also delayed earlier due to a government shutdown, so the next updates may create extra reaction in markets. For everyday people, this mix of rising costs, job uncertainty, and high borrowing rates means many households are being more careful with money. If the Fed cuts rates again, loans, mortgages, and credit costs could become slightly easier, but that depends on whether inflation finally cools down in a sustainable way. For investors, the environment is cautiously optimistic. Lower rates can push stocks higher, but anyone investing needs to be prepared for potential swings if new data strengthens or weakens the case for the Fed to act. To sum it all up, the U.S. economy today is standing at an important moment. There is hope coming from the possibility of rate cuts and the recent rebound in financial markets. But challenges remain, including weak job numbers, higher living costs, and slower future growth forecasts. What happens at the next Federal Reserve meeting could shape the direction of the American economy as we head into the new year. Thanks for watching. Make sure to like this video and subscribe if you found this breakdown helpful. And tell me in the comments, what do you think the Fed will do next week? Cut rates again or wait and watch? I'll catch you in the next video.